I remember a phrase you used. You used to talk about an ounce of protection is worth a pound of cure.
Yeah.
And that was because interest rates were very low. We were all worried about going into the next downturn without having the firepower to respond to it. Do you think that phrase applies to where we are right now, given the current economic data going into next week?
Well, this is what I would say on that. I do think there is path dependence in the following sense, that a decision that the central bank should make right now, in part, is a function of how we got to where we are. And the reality is inflation's been too damn high for 3 years. And so, at least if I were still on the committee, but I'm not, that would be a factor in thinking about such issues as when do you start cutting, how rapidly do you cut. And as Chris Waller, my former colleague and really admire Chris, has liked to say, look, we have the ability now to be patient. The economy's in a good place, strong labor market. And so I think, to me, given the history that inflation's been too high, and given where the economy is right now, I would be in the mode of not being, keen to either hike too soon or too rapidly, because I do think it's very important that this episode be an episode which is thought of as there was a temporary inflation shock. It's just transitory. It took too long to unwind, but ultimately it was transitory.
T+3.
And you really do have to make sure that the inflation genie, in terms of expectations, doesn't get out of the bottle. So I think that'd be the way I'd think about it.